Due diligence for real estate investments don't have to be a one-size-fits-all. In actual fact, when you talk to somebody who has done due diligence on a repeated basis and has a lot of experience around it, the person will tell you that even though what it is that they go in looking for may seem alike, but how they go into it for each case would almost always vary. When they start the due diligence process is when they may even start to find out that they need to be able to do certain things and go deeper than it would normally have been for certain projects. Today, you're going to be watching the replay of the due diligence session that we had during the Co-Investment Summit 2022. This session happened in December, and it was a time where we brought people, renowned experts, professionals, stakeholders from the real estate industry to come together and have various levels of discussions around how it is that real estate works, how it is that co-investment is an added advantage, and a whole lot more. But today we're going to focus on the due diligence component of that event. And joining me on that session was Ekundayo Onajobi. He's a managing partner and team lead at the Udo Udoma Belo-Osagie law firm. Getting him to join was a humbling moment for me because I knew that I really wanted someone who could truly speak to the whole essence of why it is important to have a lawyer on your team, or why it is to have a legal person who is very sound in real estate to be able to review your documents. So getting him on the panel was key, and I am happy that we did it. So me saying that I'm happy was not just because of the name of this. No, I mean, he came with the name, he came with the experience, he came with the simplicity of being able to explain, why and what the benefits of having all of that done. He gave us really practical examples for what it is that we should note and how it is that going the penny wise, pound foolish route may totally just help you lose everything that it is that you think that you had done and acquired with your investment if it's not done properly. I don't want to say too much by myself before it seems as if I am imposing his presence or he's everything on you, but just stay tuned. Take it from me that you will want to stay right to the end. And I do hope that you stay right to the end because you will be continually getting value upon value from the different nuggets and the different responses that he will be sharing throughout the session. I'd like to hear your thoughts on the entire session in the comment section when you're done watching. Share with me what your aha moments were. Share with me what were the things that you thought were new. And let's just talk about them in the comment section. Remember, this is a replay from the Co-Investment Summit that happened in 2022 in December. I look forward to having another one. But for now, let's go learn how due diligence works for our real estate investments. First things first, let's start from how has the business of real estate intrigued you? What has been the driving momentum for why you even go there?
Okay. Good afternoon, everyone. I'm a lawyer. My 9 to 5 is advising on legal solutions. And in addition to real estate, I also do capital markets and corporate restructuring, or what you could call your corporate restructuring and mergers and acquisition. And the truth of the matter is, as a parent, you are not allowed to show your preference amongst your children. You have to just hide it. But unfortunately, in my practice, I tell everyone that has to listen, except my bosses, of course, that real estate is my first love. And I say it's my first love is because so when you're doing your banking and finance transactions, when you're doing your capital raise, what you're essentially doing is moving money around on paper. So say someone wants to raise 500 million US, or someone wants to raise 3 billion naira. All you just do is draft the documentation, they sign, somebody gets a credit alert that the money has been credited and debited as the case may be, and everything is really theoretical. But for real estate transactions, you can feel it, you can touch it, you can see it. So I think that has made real estate transactions for me come alive. So you can imagine when we advised the client of ours sometime in 2017, 2018, the client purchased about 50 hectares of land around Shagam Flower Gate for the construction of a factory, the Interfact factory if you're on your way to Abeokuta. And so we did the acquisition for them. And then 2-3 years later on my way to Abeokuta, I just called the guy in the middle. Oh, Alpha, what's up? Are you guys there? Oh, I'm coming. Let me come. And I came into the factory, and there was this sense of fulfillment. I felt that, oh, I've actually bought this land, and I can. And actually, I could, feel and touch it. So I think that for me is the intrigue for real estate, in that you are able to do the documentation, and then you are also able to see the final product in terms of your brick and mortar.
Wow, that is a lot. And one thing that always stands out for me when people like you talk about real estate is the fact that you're able to see the brick and mortar. A lot of us are used to the fact that we want to have the brick and mortar to ourselves, which basically presents the initial resistance that comes when we now talk about, oh, you can co-invest and things like that. I want to piggyback off a discussion that I know you had a few days ago, about a week ago, about the student accommodation. Talk about that, because student accommodation from the business side of real estate is one, I would like to say, a primary area that literally never goes out of fashion. You can invest in it and you can stay in it and consistently earn cash flow. What are your thoughts from a legal perspective, from a let's not talk legal now. Let's talk the due diligence perspective. Let's assume that I was a client that came to you and said, help me analyze why and how that is something that I should do.
Okay, so just to get clarity to your question, as the client, are you looking at the wholesale, or you're looking at buying bits and pieces of best spaces?
So it'll be bits and pieces. So I have somebody who has come to me. So again, no. So let's create 3 people. Let's create 3 people here. I see where you're going. So now I have the co-investment opportunities. I'm selling to clients that, oh, come and invest in this project, which is student accommodation. Now your client is one of the people that I have made the offer to. So your client is now coming to you to say, this is what I have. This is something that I'm thinking about. From a due diligence perspective, what do you think?
I probably will have to send you my invoice. Okay, so put it this way. The client wants to invest in the opportunity.
Yes.
Student accommodation. The very first thing I will be telling the client. So let me say this. For all my real estate transactions, I tell, especially when I'm acting for the buy side, I tell my clients, what I'm here to do is to advise you for your peace of mind. I always tell my clients, it's your peace of mind. Your money is best in the investment, but if the investment does not work out, it's better in your pocket. So I always start out by doing that. Then the second thing I tell my clients is, on this deal, are you willing to walk away? Because you find that some deals in the long run may not be worth it, or may have some short-term gains, but there's some risks that are not necessary. And then, so you have to know when you are able to pull back. But to answer your question, if I had a client who wanted to invest in that opportunity, the first question I'll be asking is the basic question: land titles. So you as the project sponsor, you have to be able to convince us that you have registered title to the land. And so the question we'll be asking is, are you the landowner, or you are doing a JV with the landowner? So we have to clear that. And irrespective of what you're doing, either as a JV or you are the landowner, the title to the land has to be secure. That is one. And then the second thing is this: what are the financials? How is it going to work? Because with every sphere of real estate investment, it has its own peculiarities. For example, if you're doing student accommodation, the question then I'll be asking, so there are different considerations. There's the legal consideration. There are also the financial considerations. So on the legal side, the biggest issue is title. The biggest issue is, okay, how long do you have to operate this asset for? Do you have the assets out and out? And is it going to be a lifelong stream of investment? Or is it do you have a long lease? And if it's a student accommodation within a university setting, then I already know at the back of my mind that the maximum you have on that land typically will be 21 years. So the question will then be, is my client able to recoup their investment within that 21 years? So that's one of the things we want to look at. We also you tick off the box of the legal title, you tick off the box of recouping your investment in 21 years. To an extent, you want to ensure that that project has been duly authorized by the university. For example, you want to ensure that there's land title, there's due authorization, because you don't want to commit funds and then remember that in getting the approval for that project, you are dealing with management as at the X. Just like government, after 4 years or after 8 years, management can change. So if my client is going to commit funds into your project, I have to ensure that that project and the documentation for that project is watertight. So I'm not just going to tell you, I'm not going to take it that, oh, we already have management approval. I will have to seek documentation to see that it actually works. And I give you an example. I obviously can't mention their names, but let me ask the audience. If you were dealing with a university, who in a university can you deal with that will give you peace of mind that, oh, I'm dealing with the authorized person? Who? The VC. So if I tell you I'm doing a deal with student accommodation projects in a university and I'm dealing with the vice chancellor, you will be comfortable, right? Yeah. Okay, so the summary of that deal is there was a developer who has a project on site, and then the developer wanted to exit that project, and my client wanted to come in. And we're trying to move things around due diligence and all of those things. But the developer was in a hurry. So we then said, okay, you know what? Get us a letter from the school saying that they are aware of this transaction, they approve of this transaction, and that they will support our onboarding. And guess what? We had a letter signed on the letterhead by the vice chancellor saying, oh, we are aware of this transaction and we'll support you and all of those things. And on the basis of that, my client paid and they left. And then 3, 4, 6 months down the line, we then went back to meet the VC. Oh, sorry, we need this document, And the man told us, everything you need, we're giving it to that guy, we're giving it to that guy. So we're stuck. The problem has been solved now, but I'm saying you don't want to be stuck because you're dealing with people's money. So on the due diligence side, I want to ascertain the land title. I want to be sure that that project has the due approvals. Now, if you are the landowner, the dynamics of that, the questions I'll be asking will be different from if you are the developer. Right. And so, yes, all of those things. Then on the financial side, I'll tell the client to ensure that the returns are able to pay the investment, because you also want to factor in strike. You want to factor in strike because absolutely. Strike will affect your occupancy ratio. So the pricing will be different. And so there's a new way to price that now. So these are some of the considerations that you put into some of these things.
Okay, so I'm going to try and forget that you said there's a new way and not go there, because if I ask that question, I know I'm definitely going to bill. And okay, thank you. So the next question that I know that we've seen a lot, and this is because we asked people when they were registering for this event to drop their questions. Do you have questions for us? And some of them have dropped their questions. And going forward on what you talked about, that whole deal part, do you see a way that people who want to invest or co-invest, should I say, can ask for something that gives them a little bit more security? We've seen people who seemingly have good structure, who have everything seemingly looking fine, but just like you said, there's a risk factor on the developer and also some other factors. What is it that you would advise people who want to go into co-investments to actually consider? And yes, we've talked about the fact that you're asking, can they walk away? So walking away is an option. But before you walk away, what would you?
The answer to that question is very simple. Get a competent lawyer. And I say get a competent lawyer because people need to understand that if the price of this transaction or the price of this property is X, the actual cost to you is not X. It's actually X plus 1.
Yeah.
And while the real cost is X, the plus 1 and the plus 2 that is coming, that are ancillary costs, are actually the things that will give you the guarantee, are actually the things that will give you the peace of mind for that project. So I can't sit here and tell you, oh, these are the things that will give you, because there are no two transactions that are the same. However, if you get competent advisors, they have been trained. Their bread and butter is to do this transaction from different angles, and they've done it from different angles. So the simplest advice I can give is get a competent lawyer. And I'll give you an example. If you purchase any property from the Oniros, but this is public information, so I believe I can share. If you purchase any property from the Oniro, chances are that you get a deed of sublease. Yes or yes? How many of us are? You get a sublease, right? Now, the problem now is this. The cameraman gets that property from Oniro. He gets a, for want of a better word, he gets a 98, he gets a, let's say, 90-year sublease, and then sells to Lerato. And in selling to Lerato, they tag the document, the deed of assignment, and say, oh, I'm assigning it to Lerato for the unexpired residue. Until Lerato gets the remaining, he has spent 10 years of 90 years. So Lerato has 80 years on it. So the challenge is now that if the off-taker of that project is going to, if either you are going to contribute the land to the project or the person is going to buy it off you, if you don't get a competent advisor, this is the problem, the trouble you run into. In conducting your due diligence, if you only search Lerato's document, you will find it, assuming it's registered, and you will say, oh, she has a perfected title, which is correct. However, in pricing the deal, in modeling your financial projections, you would have assumed that she has the property out and out, right? And so you priced, you factor that into your pricing. However, if he comes to me and says, oh, I want to do a JV with Lerato on this project, what a competent advisor will do is that they will not just check Lerato's title, they will go ahead to check this person's title. And if you check this person's title, you will see that actually what Lerato has is not an out and out as the title of the document suggests. It's a sublease. And then fast forward 80 years down the line, the Oniru's fourth generation are coming back to you. And remember, there's a rule of law. He that owns the land owns everything on the land. So the Oniru generation comes back to you and say, oh, the lease has expired, come and renew. And then you're like, what do you mean? I have a deed of assignment. But what was assigned to you is not an out and out. There's a reversionary interest. Do you see what I'm saying?
Yes.
So the simple answer to your question is get a competent advisor. Because the plus one that you don't want to pay can actually undo the entire transaction.
Right. Okay.
But that's the truth. So you find a lot of people like going around town now brandishing deeds of assignment. But if you check the root of title and you go up to the initial, you will find out that you might find out that somewhere in between there's a sublease, there's a lease somewhere. And then everybody thinks they're buying out and out, out and out. This problem I just talked about, it won't crystallize until another 50 years.
Absolutely.
It won't crystallize until another 50, 60 years.
Yeah. Where even the person who bought it is probably gone and then it's their own.
So imagine the kind of power you will have if you are an new fourth generation. You will just sit down. If you are the only fourth generation, you just sit down and say, you know what, okay, it's time. Because you remember, they have 99 years. What they gave to you is 99 years less 1 day. So on the basis of that 1 day, the reversionary interest comes back to them. So they will go back to the government to renew their 99 because it's theirs. And then they will now send a message to everybody for that to come and renew. Prevailing market price. Let's continue.
That last line is that's just the winner, prevailing market price, because it's not
So the answer to
negotiable.
the question is just
Yeah.
get a competent lawyer.
Okay. So, wow, that has been something, and it's always surprising when we hear that these things happen, and then people say, Didn't you check?" And it's like, okay, but who checked? You know, who checked? What did they check? Why did they think that they wanted to check at that point in time? Understanding the role that a competent lawyer or legal advisor plays in the entire real estate transaction, I would like to say that it is becoming more and more important. I always advise my clients to get a lawyer to look at it on their behalf, because that lawyer would then break down things in ways that they would need to know. However, we still have people who, as you say, don't want to pay the X plus one now. What is something that how do I put this question now? What is a way that lawyers can then lend themselves better to these type of deals? I mean, you're doing it. I'm hoping that you can share some insight from how you have gotten to where you are to be able to help someone else to be able to get there.
So I'm not too clear about what you exactly want.
So the question is, now the question is for lawyers who want to be able to get that level of credibility, who want to be able to exercise that level of competence. What would be something that they should start to look out for? Because we cannot underestimate, we cannot remove the role that lawyers have to play in the business of real estate and due diligence of real estate.
So I will not sit here and tell you that X, Y, Z do that, because I know what I know because of the platform that I've been privileged to work on, and that platform has given me the opportunity to be exposed to different types of transactions, and then one has learned from those transactions, and then when you aggregate all of those lessons, you are able to then advise. So, but my advice to lawyers will be to go back and brush up, because as you see, the problem with real estate is that there is a law that at times does not make sense. Then there's the facts. And over time, a lot of us have mixed these two things, and then, being able to say, some booby traps, and you say things like, it doesn't matter, let's just get this deal up because you want to get your commission, because you want to get you want to get your percentages, and you go. I think we should all go back to our books and, read up on our books, really. That's really, and the good thing about it is the law on real estate has really not changed. It's still our Land Use Act 1978 that it is. Then plus minus some judgments here and there that have altered one or two things. But as lawyers, we just need to go back to our books and brush up. And then when we find ourselves on the other side of deals, across the table from other lawyers, let us drop our ego. Because at times you find lawyers, trying to make a point that it's just ego. You understand. So I'm doing it. I'm advising someone now. It's a funny one, and I don't want to go all technical, but the people that have the land acquired the land in 1976, before Land Use Act of 1978. So they have the land in 1976. You can say customary title. Then sometime in 1983, they applied for a C of O. In 1976, they got a lease from the family. Because it's a lease from the family, it is customary title. Now, in 1973, off the back of that lease, they applied for a C of O from the government. Not Lagos, don't worry. It's not Lagos. Off the back of the C of lease, they got a C of O from the government. The C of O was for 50 years. Now, don't worry, the 50 years is about to expire in another 7 years. So now, my client now wants to buy from this man who has gotten, so on the basis of the C of O, The person that has a CFO has sold now to our current seller. So the person, our current seller now believes that he owns the property because he has a CFO or his title is from a CFO. And the point I'm trying to make to the man is, no, sir. Yes, your title is to a CFO, but that CFO is sitting on something. And that thing the CFO is sitting on is longer than your CFO. So when your CFO expires, the underlying title continues. So you cannot really say you have the property out and out. So yeah.
Wow. Okay. Yes. So I mean, there's like a lot of wow. Yeah, but I I think this basically reiterates the importance of having extensive due diligence done on every real estate transaction.
Yeah.
As stakeholders, players in the market, we too need to be able to understand and appreciate the fact that there is a place for everything. And I say this also because I also have had deals that have either stopped, stalled, or had to be thrown out because some part of the due diligence just didn't pan out or we couldn't trace it completely. No, it's too much trouble to take on, or it's too much of a risk to take on and presume that you can clean it up. One question that I want to ask is for people that are considering going into real estate development for themselves now. So, for example, an individual goes out to buy land and then wants to come and build a mini estate, as they like to call it, wants to take money from his brother, his cousin, his best friend, his whatever, but he wants to be his. So they are financing the deal for him. As a professional who has worked through this type of thing, what kind of agreement would you say that they are best having? Because, and I ask this because right now we are seeing a lot of people going under the auspices of collaboration, co-investment. I mean, like, there are a lot. There are a lot of things that are basically bringing people together to achieve the goal. But in a lot of them, we don't see or hear the agreements that supposedly bind or guide or even protect the different parties. And this has then become a question that people are saying, I want to do this, but how do I protect myself?
So to answer your question, I think my question to you is, who am I advising? The landowner that wants to do the development or the people that want to advance in the money?
The people that want to advance him the money.
So it's very simple. Have a loan agreement between both of you to specify that it is a loan and it is not a support. It is a loan and not a support. So you have to have that clearly documented. And the question you also want to ask is, this is business and not family. So you also want to ask, okay, what happens if you default? How am I going to get my money back? Are you giving me any form of security? And the question is, if you go to a bank, they will ask for collateral. So you also want to ask yourself, do I want to ask him for a collateral? As well. Because it is one thing to advance funds to someone. It's another thing for that person to have the capacity to repay. And then in between the time lag, anything can happen. So you need to have your documentation, watertight to clarify that it is actually a loan, and then to talk about your rate of return as well. And in case of default, what's going to happen?
Okay.
It has to be clear. So you, the person providing the funds, you need to be clear, especially if it is family, if there's a family dynamics. Are you supporting this person on this project, or you are lending, he's borrowing the money from you? So whatever the case is, then you get, documentation to spell it out, so that in future, there's no back and forth as to, oh, I thought you were supporting me, you were supporting my dream.
Right. Okay. So at this point, I want to ask: are there any questions here? Does anybody have a question?
Don't worry, I won't chat there. So I think for my stay here, ask any question.
Please. Okay. So let's start with the questions.
Can you clarify that? Is it possible, just like you said, is it possible? Why is it that, for instance, property has a sublease or lease, and then they're furnishing other people, other buyers, a deed of assignment. How does that work?
So that is not it's not an issue of law.
Sorry?
It's not a legal issue.
Okay.
It's a contract issue. And everyone is trying to see how they can secure perpetual rev stream of income for themselves and for their generation. So why did the Onirus do that? Why did they do that? So that they are sure that everything within that Oniru Act stays there. But let's start again. Even the government did not give you out. Let's go back to the beginning. Even the government, except for your if you did acquire by customary acquisition and all of those things, if you stay with your COO, your COO is not for life.
Yeah.
Usually 99 years, you have this for 50 years, you have this for 5 years. So you're coming back to the government to renew. To your question, even if your developer gives you an assignment, a deed of assignment, after the expiration of the root of title, you will go back to the government. Just what I'm saying. So it's not a legal issue, it's purely an issue of contracts. So the question is, they want to sell to you and this is what they are selling. Are you willing to buy? You can't force them.
Right.
You can't force them. They want to secure the future for themselves. So you can't blame them. Sorry. So what you can then do is, which is why I said, I always advise my clients, are you willing to walk away? Good. What you can then do is, you know what, okay guys, come, let's sit. It's an annoying cost, but okay, you know what, I'm willing to mark this up for another 10%. Give me an assignment. If you have that conversation, they may be willing to consider. And then maybe you of the entire people they're selling to, just you alone, they give you an assignment and with every other person. And yeah, and the only example I gave, I would have rightfully assume that there are bits and pieces of people here and there that have assignments even within the Oniru domain. So it's a purely contractual issue. Purely contractual. But I have clients that will tell you, why am I fighting? My children will go and fight it when it's their turn. I just want to live here. Why am I fighting another battle for another battle that will not come in another 80 years? And the client is 50 years. 50 plus 80, 130. So it's a contractual issue. So if you were the developer, you will make that argument as well. This is what I'm selling. It's either you buy or you go.
Right. So, considering the cost of property when it's fully built and all, a lot of people are going into off plans. We sometimes find friends who say they want to co-invest and take on projects on off plan. Now, a very recurring question always comes up, which is the fact that what if the developer defaults? And this also happens for people who are not co-investing. I'm just bringing it up because some people do co-invest, and one person would say, oh, what if the developer defaults? Another person would say, what if the one party who is also supposed to be a part of the co-investment should default?
Okay.
From a due diligence perspective, how can people protect for that or against that?
Okay, so that question is a two-in-one question. The first question is developer default.
Yes.
The second question is co-contributor default.
Yeah.
Remember when I started, I said, when you're doing real estate deals, all you're doing is buying and selling peace of mind. So for you to get into, so I talked about the legal diligence, I talked about the financials. Not the most important, a very important one when you want to do a deal with a developer is to check their track record. You want to check their track record. How many deals has this guy done? What is the market saying about him? Because at times, I think the previous panelist said, at times you do a deal just based on the personality of the person you're dealing with, because you think you can trust him. So the question then is, when your developer defaults, what do you do? Some of the things we put into the documentation is to say that if you don't deliver when you say you're to deliver, so for example, if you're to deliver by 30th December 2022, and for whatever reason you don't deliver at that time, from that day till the day you deliver, you will then be liable to paying us the commercial rent of that property till the delivery time, till the delivery date. So that's one of the things you can build in. the truth of the matter is, and at times I think our developers also need to up their game a bit, in the sense that if you tell your off-takers to say, oh, I'm doing this, and they see that you are doing it by the books, and what you are doing is actually to give them the peace of mind, they may not mind paying the slight premium, because all of these things also affects pricing. But I think that is now an issue of regulation. Do you understand what I'm saying? It's an issue of regulation. However, there's just so much government can do. Government won't come and make the contract for you and I. So Lerato has a project. I am being a lawyer, I'm sticking the books, and I'm saying, Lerato, where's your performance bond? Where's your insurance? Performance that, if anything goes bust, I can look to your insurance, which should be the thing. But you come and say, Lerato, I want to sell. So I'm asking her for things that are the correct and the right things, but which are placing extra burden on her. And you are not, I want to buy her, you've done inspection, okay, let's deal. Who do you think she will sell to? If he is my client and I'm telling him, okay, so I was privileged to serve on the Lagos State panel that investigated that Ikoyi building collapse exactly this time last year. So coming out of that, don't worry, don't ask me what happened.
How did you know?
So coming out of that panel, my mind shifted, and anytime I do developer type advisory now, especially for the buyer, I always insert in there, we're not paying you one-off. We're not paying, anytime I'm advising off-takers, we're not paying one-off. We'll spread the payment from inception to delivery. Now, for me to start, I can pay you an installment to secure my spot, but there will be a milestone that I will not pay until I see the development plan, approved development plan. Then, what I then do is tie the last milestone payment to your delivery of my closing document and a certificate of completion and fitness for habitation, which is issued by the government to say that, oh, this building is fit for habitation. You see what I'm saying? So I think the developers will want to, respectfully, may not want to comply. But if we place a premium on our lives, and she brings a project here, and everybody on this side are asking her for all of those documentation, and people on this side are not asking her, then she knows that, oh, she's not going to sell to these people except she provides those things. She will be forced to get those things. And then she will mark up her price accordingly. It's not an issue. But remember I said, it is peace of mind you want to buy. So I think as the real estate, as members of the real estate universe, especially the purchasers, we need to push our developers to play by the books. There was a deal, we were about to close it somewhere, Oyinko Abayomi Drive, like that. And I was telling him, where's the certificate of completion and fitness for habitation? He was like, they don't have. And I told the man, okay, I can't. But however, remember, a president once said in this country, your duty is an advisor. I have a discretion to take your advice.
Or not.
So if Lerato is my client and I'm telling her by the books, certificate of fitness for completion, and I'm saying performance bond, and I'm saying performance, and she was like, and she's eager to do the deal. What do you want me to do?
That's why I said I have the answer to the question.
Do you understand? Do you understand? So it's, I think for the developers in the room, let us improve on our standards, and that can actually be part of your selling point. To tell the investors that, there's as a developer, we are committed to 100% compliance. Do you understand what I'm saying? So that when the buyer is asking you, oh, why is your price slightly more than that? You are telling them, I am committed to 100% compliance. I have a big brother who does real estate development. He told me, when we were opening one of his projects, he said when they were doing the piling, it could have passed. But he said, Ekundayo, I won't sleep at night. That thing will pass regulatory test though. If they don't want, it will pass. He said, I want to spend another 15 million to solve that problem. So as developers, up your game. As investors, push for 100% compliance. And then get competent advisory.
So I'll do you one better, and that is that was something I hadn't even talked about earlier, which is the fact that we have the co-investment community. Now, the co-investment community is not just about come and invest in something. It is also about you coming to learn how to do real estate better. We are building an entire, I like to call it an academy, where you can learn different components, parts of real estate investing, which is another reason why the speakers that we've brought on in this summit, yourself inclusive, have been across the different ends of the value chain. There's a legal aspect. I was hoping that one of the speakers that we're supposed to be on today could come and talk about the infrastructural development. You know, there's also the marketing part of it. You know, a lot of us are marketers. She markets for people, I market for people. But all of these things are not things that, as he said, you can get in a book. You read a book and it's not going to be exhaustive. It is a continuous journey of learning, relearning, and adaptation to what is at one particular point in time to what happens in another time. So what we have is the community is membership driven. So you can pay a one-time yearly fee where you would get access to different learning sessions from people like him, where I'm going to beg and say, come and talk about certain topics. And we can then have closed door sessions where we talk about these things, we ask questions, we look at how to do it. And yes, there will be parts of it that will also be paid for. I can tell you that much, because there's no membership that can cover everything. Because even if I'm going to charge a membership fee for gaining access to all of these things, there will be layers that you will still have to go out and get from all the different people that will be, I like to say, faculty members. Welcome to the faculty. In the community, and that you would still have to follow up with them. So please, let's have a discussion after this summit about how you can become a member. It's not just about, oh, come and invest. I would love for everybody to come and invest continually. But the bottom line is that the more learned and knowledgeable that we are about all of these things, it helps us to even make better decisions. You don't have to necessarily invest with me, but if we can build people that are more enlightened about how to invest better and smarter, I think that our entire economy may even be better. So on this note, I'd like to say a very big thank you to you, Ekundayo.